So far in 2017, what we've seen is a continued strength in equity markets. The last 2 months have continued to be strong, very much akin with what we actually saw in Q4 last year as well. This whole growth, reflationary trade is supporting the equity markets. Now, of course, there remains lots of uncertainty, as there ever is in the markets in today. However, actually predicting these type of binary events we think is very difficult indeed, and not something we necessarily pay too much attention to here at Morningstar. Instead, what we actually look to do is fundamental analysis on the markets to determine where they are in their valuation cycle. Now, actually, if we look back to 2016 and the uncertainty and the outcomes of some of those uncertainties, it was very difficult to predict, and most professionals got it wrong. And not only that, actually predicting how the market would behave to the uncertain outcome is also incredibly difficult. So lots of professionals talked about Brexit leading to a UK recession. Well, as we know, so far we've had 2.6 GDP results, and actually we're not in a recession today. Equally, with the result of Trump winning the US election, there was an expectation that would be bad for the equity market. Well, actually, instead there was a strong equity market for US equities in particular. So it does remain very uncertain today. And some of the issues around today, they're a continuation of what we've had over the last couple of years. European instability, potentially. Geopolitical risk as well. Much more movement to the right. These are concerns, but these are binary events that we just can't predict. Instead, as I said, we focus very much on fundamental analysis. And today, where that's leading us to is to consider the fixed income market to be very expensive, as we have done for a number of years so far, and equities to be closer to fair value, and if anything, becoming a little bit expensive with the continued strength that we've seen recently.